Hi heroes, RWA is a trend, AI is a trend, but how can you make this bring you real value, real money? My friend Nick from Compute Labs has built the first company to turn all compute assets into commodity. Compute Labs have raised 3 mil from tier 1 funds like HashKey Capital, OKX Ventures, and have partnered with over 35 top companies in the industry to create the first protocol to allow people make money on the growth of AI and compute powers like GPUs. So let's get deeper and let's meet my friend Nick. Nick, I was on the Token 2049 as you, but I was shocked by seeing one of the stands look out from all others. You have built the whole rock climbing wall in the middle of the main venue's floor. So what was the idea? Like, how did you come up with the idea to build something like that?
So we have a lot of really talented and creative people on our team. And first off, thank you for having me. Thank you, George. I appreciate it.
Yeah.
But the idea of the rock climbing wall, we're super excited about it. We haven't seen it in other conferences, and we knew that, look, we're entering the market. We have to be hot. We have to excite people. More than that, just give them something fun. Mm-hmm. And although we're taking a very serious, a heavy topic such as compute assets and AI, we also want to be engaging. We want to make sure that compute can be something talked about in a very engaging and fun manner. And so we were thinking, okay, there's going to be this market that's growing. It's very high, really high valuation. What else is high? Well, rock climbing. And it's just really fun like that.
Straight to the moon.
Straight to the moon.
Explain, please, in a couple of words about your super complicated industry that you're working in on fingers, to me.
The most simple way I can put it is that have physical hardware, compute assets. We buy GPUs, but we tokenize it. We turn it into a digital format so that anybody can have a piece of the GPU. And part of the reason why is because when we talk about enterprise grade GPUs, like for example, a H100, one GPU costs $30,000. Mm-hmm. It's a very expensive product. And if you're trying to get into the growth of AI and you want to invest in hardware, not a lot of people have $30,000, and let alone you need 8 of them to build one server. My point is that it's hard. And when you have a fractional ownership, you give people more equitable growth into the growth of AI. So I went a little bit of a tangent, but the long story short is we tokenize GPUs and compute assets.
Perfect. And you allow people basically to stake it and make money on others' yours GPUs that are working.
Yeah. So primarily the compute assets that we own on our balance sheet. So we take the custody of it. We own the GPUs. We then secure demand from it. From data centers and AI companies who want to use it. We lease out the GPUs to them.
How much GPUs, by the way, do you have?
I believe we're at $86 million worth of GPUs.
Wow.
Yeah.
What's the total trend of RWA and AI? What do you see in the coming years?
I see more real world use cases and real world utility. And I think that's why RWAs are becoming a much hotter topic. We need to bridge the gap between Web 2 and Web 3. Over the next few years, I see that Web 3 will no longer be a separate industry, but rather it'll be just a technology. And the way we get there by merging these two industries is by building use cases that work together. And I think RWAs are this use case where we have real world products on chain, having digital representation. That is super fun. That is super real, if that makes sense. Does that answer your question?
Definitely, but what in compute world, in the whole real world assets, everything's going to be tokenized. My car, my keys, my laptop, my GPU, not even to say my cat.
No.
We don't do cats.
I have 2 cats. I love cats. We don't see tokenization of everything because it doesn't make sense. We see tokenization of only things that should be tokenized for specific use cases. We're giving people the ability to get into the growth of the AI industry by allowing them to take ownership of the asset that's used for AI. Mm-hmm. When you're an AI company and you're doing inferencing or training models, any kind of machine learning, you need to use physical hardware. And I think it's unfortunate that because these assets are so expensive, no one can really do that themselves. So blockchain allows people to have ownership in that. Then it allows them to do derivatives trading or to speculate on the futures of it. These are the type of use cases that we see tokenization for. So as long as there's more financial, transactional use cases, then maybe something should be tokenized, yeah. But should we tokenize a cat just because? I don't know, it'd be cute. I mean, I don't know if it makes sense. I don't know if I would trade a cat. I wouldn't trade my cats, actually, no. Maybe. There could be use cases we haven't thought about yet.
Nice. And since it's all connected to the Web 2, what do you think of the Web 3 bull run that is coming? And how do you see the tokenization of GPUs going to be helpful to all your stakers in this upcoming bull run?
A bull run might be coming. That's cool. And I'm excited for that. Will the bull run help us and our TGE and our tokenization protocol? Yes, absolutely. But because we're so Web 2 focused, we're just focused on making sure that people are using our GPUs.
What about the risks? Like if you're tokenizing something that is not even on your premises, how would you be able to prove the ownership in the Web 2 world where legal opinion matters? What are the risks about the real assets tokenization in regards of GPUs as well?
That's a good question. Yeah, so the top risk of tokenizing any product is certainly like, is the real product backed as a tangible product? I can tokenize this water bottle right here, but what if someone is actually trying to determine, is this product real? And then I just show up, here you go. Here's my water bottle.
Got it.
That's the problem. That's a risk in the market. Cool thing about GPUs is that they all have serial numbers and model numbers, so that's easy to back up. There is another risk of like, okay, what happens to the product? What if this water bottle degrades or it no longer works or it's broken? That's another problem because then you own like a GPU or digital token of a product that is broken. That is another problem within the space simply because if there's a broken product and you own a digital representation of it, that can cause an issue. So how does the market react to that?
Oh man, you mentioned that you came from the gaming world.
Yeah.
When did you when was that click that you decided that like all GPUs have to be like, tokenized, let's make some money here?
I started my career in Web 2 gaming at a company called Xsola. In that time, there were some partnerships that were more interesting than others related to cloud, related to hardware. But interestingly enough, games, they use compute assets, either for rendering and to make the game visually aesthetic and make it work, or sometimes for NPC and like training, so you can create AI, like AI NPCs, or simply for cloud. And then we realized, man, like all the work we're doing is powered by this one product. It has multiple use cases. And then when we asked the question, like, okay, what's the next wave of the industry? Like, if we were seeing another industrial revolution, how do you get into the growth of the industrial revolution? Well, invest in the product that grows it. I don't know if you're familiar with the California gold rush, are you?
Yeah.
Okay. There's this saying in America where it's like, if you want to get into the gold rush back 100 years ago or 200 years ago, how would you get into it? You build the shovels. How do you invest in the shovel of the growth of AI? You buy GPUs. That's how we see it.
Jack London would be shocked of this idea. He was writing about the staking, but he did not stake at the time. You're planning to take over the world with all these GPUs and become the biggest supplier? Or what's your goal?
We for sure see ourselves becoming one of the biggest suppliers in compute ownership, compute financing. We're going to do it. We're going to hit it. There's no other company doing it the way we're doing it.
I like that rock and roll style. By the way, you're based in LA, right?
That's right.
How is the competition with other AI companies? How do you think, what helped you succeed among them?
To be quite honest, we haven't seen a ton of competition. In our very specific work of tokenizing GPUs, we are a first mover. So by that nature, as a first mover, there's not much competition, thankfully.
Can you share some good partnerships that you're proud of and bring you more value, and how exactly they help?
The partnerships that have been quite useful for us is on the capital supply. And just so I can break it down, in order for our business to work, you can call it modules. We need 5 modules. We need capital supply. We need capital buy GPUs. We need GPU supply. We need supply channels to actually buy and access GPUs. We need data centers to host and lease those GPUs. We need demand, or AI companies who are actually using the compute. And then we need derivatives platforms to build more trading features like staking, lending, perps, calls, put, shorts on all of these GPUs. The partnerships that have helped us have been on the capital supply and the GPU supply. On the capital supply, we have a joint venture with a Japanese public company, which has been very useful. And it's been why we've been able to get so much capital for GPUs. And the second is our partnerships with Nvidia on the Inception program to access more supply. But that advisor on our cap table, they have just an amazing rate and cost of GPUs that they pass off to us. And that's been super helpful. Last year, the GPU market was worth 45 billion. As of 2024, the market will be over 60 billion. The AI market is going to be 820 billion in just 5 more years. And it's so exciting that when we build this market in Web3, we're the first one to do it, giving people all this exposure into the growth of it.
So how exactly the partnerships helped you to get more credibility, or perhaps help you in some other way? Tell me about your partnerships, because as far as I'm concerned, that was like, what, 35 and over partnerships with top projects.
Yeah, partnerships are everything in our line of work. We're more of a partnership heavy project as opposed to a technology heavy project. I mean, of course, we're building our protocol, but as a protocol, we need to have partners to integrate to. The nature of business is just partner, 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 partner. That's how we build value for our protocol and for our users.
But isn't it like slightly Web 2 type of thing when you get as many partners as possible, where they're on Web3, some projects just pump the tokens, get that, and without any partnerships and get rich? What's your opinion on this?
I have no opinion on the Web3 way of doing it. I just know the way that we do it in Web2 is we need partnerships. Partnerships are the only way to grow a market together and to obviously demonstrate credibility. And partners range from sales to channel sales to simply marketing, but everyone's got to work together to build a market.
And what's the regards of Near, Manat, IET, and other top partners that you work with? How they help you?
They're all amazing. I mean, so yeah, we're first on Solana, but then we're going to be building on Near and Monad so that we can integrate with their ecosystem, their projects. A part of that is because we want to reach some of their customers who can use our compute. Part of it is because they have projects that are building DeFi lending protocols that we can connect to our protocol. And then part of it is because they are AI companies or customers themselves. So for example, the Aether, for example, that's a marketplace. Aether is an amazing company with amazingly smart people. We love the Aether team. They have demand, they have supply, and they bridge it together. Their matchmaking system as a marketplace. We're a supply partner.
Are you their supplier?
We are a supplier for many marketplaces.
Where is your GPU stored?
So we have a supply in San Francisco, Montreal, and Tokyo.
And it's worth of 85 million altogether.
Yes. So at this point, I think it's worth 86 million.
And what are the terms to work with you as a supplier?
That's a great question. So that simply depends on how much supply do you need? And then will you use it for yourself? Will you use it to sell off to another company? I wish there was a simple answer to this question, but basically we own the GPU and then we lease it to whoever needs it on premises. So physical GPU on premises.
And what regarding the funds. How did you attract the funds? And did you expect to raise 3 mil on the pre-seed level? Because I know you work with OKX Ventures, with the HashKey Capital. So how the negotiations worked that they gave you the money on the pre-seed level? Because there's so many AI projects and stuff like that. Pretty competitive.
You're certainly right. There are a lot of AI projects out there, but there's not one that does it the way we do it. Because we are a first mover and we are one of the very few companies that have an interest in enabling exposure into the growth of the entire AI industry, the AI growth. There's not many projects that do that. And that's why our cap table, our incredible investors have supported us, because this is a untapped market. The ability to actually allow people to get into the growth of a whole new revolutionary industry, that hasn't been done this way.
So if a project wants to raise funds and is super good at pitching, super good at believing in your own product, how exactly should they raise the funds? How exactly they should face HashKey Capital or any other fund?
Real world problems. The only way to raise money or to sell something, regardless whether you're pitching to an investor or if you're selling a water bottle, you're solving a problem. You have to be very clear and simple about what is the problem you're solving. And then you can be more specific about, well, how big is that problem? Do people really want to solve that problem? Or is it just a nice to have? Is it a need? Is it a nice to have? How much are people willing to spend on that problem? That's what you should first be thinking about. The short answer is, okay, is there a solution to be made? How much is the solution worth? I don't care who anyone is talking to, as long as they focus on problem statement and then solution statement.
In regards to the fund, how exactly you approach them? Maybe someone connected you to a fund that you had the chat?
Our CEO has a long history of working with VCs, so that was certainly easy. He's already a really smart guy, super credible, so that helps. But in addition to that, investors love providing introductions to other investors. Investors all talk. If you have one decent investor, I guarantee you that while you're pitching them, they're already talking about your project to another investor. It's just the way they work. One, it's to simply validate, hey, is this interesting? And the other is because they think that it'll be helpful for themselves. If they're investing in a company, they want to make sure that other investors are interested because it'll grow their position.
Perfect. That sounds actually pretty smart, because investors do have their close community where they talk and share their ideas and perhaps invest together as a pool. So with all that, are you thinking of creating your own incubator where you can help AI projects with bringing your partners in, your audience, GPUs, and just incubate the project that is close to needing GPU power?
We are thinking about incubating some projects that are quite early, but these projects are more on the derivatives nature of compute assets. I can definitely see ourselves incubating or providing a grant to some AI companies that need compute. I can easily see that happening. There's companies that need help with compute. They want to be a part of our ecosystem. They want to grow the market together. Absolutely. We want to grow the market with as many partners as we can.
What type of grants we can talk about?
Hard to say. We haven't done one yet, but we're open-minded. We're very flexible people.
Regarding the marketing, how are you guys getting more community on your site and getting them involved with the very complex nature of business?
The very first thing I would like to tell people is to craft your message and make it simple. If you have a complex message, it's just not going to get understood. People can't buy into complexity. And even if you want to spend 15 minutes trying to explain something, you've done too much. It's just not going to work. But there are some fun ways that we've been able to grow a community, which is, of course, sponsorships help. And I'm honestly always surprised at how effective some sponsorships are. But the trick is you got to make sure that when you're asking and learning about sponsorships, what's the size of the community? Is there going to be a return on investment? You also have to determine what is your return on investment? What are the KPIs?
And we're talking sponsorships on the events, right?
Events, but more importantly, side events. There's nothing more effective, in my opinion, than side events. You can do the regular Confluence floor. Don't get me wrong, that will be good. But I personally view side events as the single most effective way of growing a community and getting people to engage and talk about you.
Did you have a side event on the token?
Tons. We sponsor a ton of side events. So we've co-hosted, we sponsored, and side events are cool because people feel a little bit exclusive. They want invitations. And, if they're looking for invitations, they're starting to think, oh man, this company sponsored this event. I have to reach out to them so I can get an invitation now. Also, the rock climbing wall, super sexy, very engaging. People are literally having fun on our logo, and they're just climbing over our logo in the most fun way. And we love that. And one more. With our team coming from B2B enterprise sales, we truly believe in the rule of the 8, where you need 8 impressions, or you need to talk to someone 8 times, or you need to show your logo 8 times. Doesn't matter whether it's one time they see a logo, one time someone mentions up your name, or one time, they're just walking past something that reminds them of your logo or your brand name. If someone sees your name 8 times, the likeliness of closing is dramatically increased. So be visible.
And how are you staying visible?
The regular approaches, the social medias, but the sponsorships. We sponsor a ton of events, and that's been useful getting people to talk about us.
Who mainly is your client?
Our main customer are data centers and AI companies that operate their own data centers. That's our preferred type of customer.
What do you offer them as a real financial perks?
We offer them the ability to move a capital expense to an operational expense. It's super boring, but this is what CFOs want. It helps them with their balance sheet. They don't want to manage a depreciating asset. They get to focus on just the operation expenses, and they can do tax write-offs on that. We're helping the financial side of the AI world.
And what's about the users?
As in Web3 users?
As in someone who wants to stake and make some money on GPUs working.
There's no easy way to invest into the growth of AI. There's no easy way for anybody to buy a GPU, install it into a data center, getting it operational, finding someone to use it. That's not easy to do. So we help them get into the growth of the AI industry by allowing them to have a piece of the GPU that is doing all of this and being used on the inferencing and the training.
So how much estimately a user can make by staking your token?
That will certainly depend on what kind of GPU they have a position in. When we look at traditional Web2 markets, H100 GPU can provide a 30% APY, sometimes over 40, 50.
In US dollars, that would be...
It depends on the server cluster, because every GPU is a part of a server, and then there's a difference in how many servers there are per cluster. And then each cluster is more or less efficient for specific types of training. It's more like if you have $100 investment in a product, perhaps you'll make $30 back on that first year. And then there's, of course, the B200. Now, at Compute Labs, we are one of 8 companies in the world to have access to this very unique asset. Nvidia has pushed back the delivery on this asset for another 2 quarters. But fortunately, thanks to our cap table, we're one of 8 to have securement by the end of the year. We have the 2nd largest cluster in all of APAC, just behind SoftBank. For that asset, although it's not there's no price released on it on an hourly basis, but we're thinking that might be providing a 50% plus APY.
What's about your airdrop? Are you planning an airdrop, and how much is allocated for users?
We are considering airdrops. I don't have specifics nor details on when and how much, but stay tuned.
Sounds fair enough. But for the users to know, how do users know that the GPUs are actually working? They can track their money flow and not just sit waiting for the API that might even not happen if your GPUs are not involved and you don't get enough of the retailers?
That's a great question. I love that question. That's the beauty of our protocol. Makes things transparent, makes things on-chain. Each GPU is tokenized, so things like its serial number and model number will be there. But also the energy cost and the runtime And if it is idle, it'll be transparent there.
What's the whole concept of your company towards the GPUs? Why do you believe in that so much? Why do you believe in AI and compute power?
I think we all have seen AI just explode. I personally use ChatGPT and Gemini to help me with my presentations, help me through even just like creating job offers or just like writing one-pagers. It's super useful and it's increased my productivity, my efficiency like dramatically. I think we all agree with that, right? So let's look at the numbers. As of 2023, the GPU market was 45 billion. As of the end of 2024, the GPU market is over 60 billion, maybe like 61, 62 billion. That's a dramatic increase. Now, that's just GPUs. Now, if we look at actual AI industry, we know that the forecasted rate of the AI industry will be $820 billion in 2030. That's in only 6 years. We want people to be able to access that growth. Otherwise, people are just be talking, man, I wish I could have invested in AI somehow. So we want to help people do that. Also, I want people to think about the derivatives on that. Derivatives are a 10 to 20x, maybe sometimes even 70x multiplier on a underlying asset. Imagine the derivatives market on these compute hardware, these assets. So 60 billion by 2024, 10x that is a $600 billion market that hasn't even been touched yet. Get into the growth of that. That's super exciting.
All right. So if someone is watching us from the audience and interested in getting that 30% API in the future and getting to the market that is growing, and as you mentioned, AI might get to 820 billion
USD by the end of 2030.
Exactly the point. So if you're interested in that, you know where to find the link in the description. You will get to know how to make more money with a solid project backed by many partners and funds. Now about the KOLs.
Even this interview is considered a point of interest or a point of contact that now someone is going to be seeing this for maybe the third, fourth, or fifth time, which is great. KOLs are great at bringing additional exposure and simplifying things that are super complex. That's also an additional point in the rule of 8. Get as many points of visibility or people seeing you like that in 8 times or so. But yeah, be visible. And to highlight, simplify, one of the earliest things I said, and I think KOLs are really good at that as well. Yeah. And George, I'm so grateful that you have me here, bringing on an additional one of these points of the rule of 8, telling the community about our project. Thank you so much. We're really grateful for you.
My pleasure. And if you are a KOL and you're interested in highlighting good tier 1 projects, then you can find the link and you know where to do it. And we definitely know how to get in touch with best products on the market. I believe many hardworking guys might find this interview interesting because it simplifies what they've been ignoring to understand for so long. Thank you so much, Nick.
Thank you.